Hello, everyone. We're back January 5th with our 16th episode of the Talking Trends podcast, which Jerry has some thoughts on in a minute. But first, Jerry, how you doing?
Doing well. I've survived the first week of trading and continuation of mostly counter trend to our established trends. Can never be too comfortable about a trend or a trend change. Then it could change again. I don't. I don't enjoy that.
Yes, the end of the year was not very fun. Um, for me, I don't think a lot of trend traders as well. I was talking to a friend yesterday who one of his investors invested with a trend follower recently, maybe a few months ago, and he had a rough November, December, and now he already wants to pull out. it's you know, uh, it, these moments really stir up a lot of emotions in me, and then I feel like such a failure. Um, because that person didn't invest with me, but man, like some people just just need help with this stuff, or they're just, I don't know, they're investing too much, or I don't know, they're too engrossed with the crowd and the S&P and the stock market and all these things, and I just feel like a failure, like I didn't get through to, not say him, but people at large, that uh because that when I lose, that is not my first thought, and like I imagine that's not your first thought either, where all right, we lost some money, as you say, as you said to me, privately over the years, we're building expectation, and of course we don't know what's going to happen this time, but historically, these moments tend to happen, no big deal, but they're not cause for let's tear it all down and withdraw and get into something else. That because that you have nothing,
That's why
you have
it's
nothing.
so. That's why it's so important for everybody involved. You and me especially, but then we need the clients as well to be good clients. And we need to be good traders and they need to be good clients. And a lot of it is falling in love with systematic trend following and just making that your bottom line. Um, because if we give up, it's not going to work out well. And if they give up, they're getting out and they're going to have a bad experience. It's going to hurt them, hurt us. Um, but you really just have to have all this. It's very similar to buy and hold. I read a lot of stuff about no matter what the market's doing, that people are just, these advisors, they just put this stuff out there on Twitter all the time of, you're dumb if you just don't buy the X at 2 basis points. And you've got to have that mentality, regardless of what you do with value or growth or trend following or indexing, or you're just going to miss out. And it's going to really be a bad situation. I don't think, I think you got to have that mentality and that edge, unrepentant. I'm going down with the ship to a large degree. I'm going to keep doing what I'm doing, and we're not even close to getting to a situation where we should be worried. But then again, when you set up your portfolio and your money management, and you can't put yourself in a situation where you're losing so much money that you're making it impossible for you to keep following the system and for clients to hang in there. So you can make a good system intolerable if you trade it too large. So,
Yes,
but
I
you've got to
agree.
hang in there. You got to hang in there.
I
Yeah.
agree, and I think that's a huge edge, um, to disclose those things. That's something I disclose. I said, hey, I go a little hotter than others, because my intentions are to try to grow a little bit more aggressively, and we're okay with some bigger swings. If you're not, and you still want to invest, or you like me and you want some exposure to this, you know, invest less. invest
No,
less?
I was saying something a bit different though,
Okay.
and that is I don't. It's you know, it depends on like if you're down 15 or 50, of course, but
Yeah.
you don't. I'm saying like you don't know what people can handle. And you could swear and you could have evidence, written, signed evidence from all your clients that I understand
Sure.
exactly. And then they're just like, dude, I thought I could handle it. I can't. So what I'm saying is you got to take that in consideration. If people say they can lose 50, that probably means 30. Okay.
Yeah.
And, um, and so you need, and you say to yourself, I'll follow this for the rest of my life regardless. No, you probably got to say, I don't know about that. I haven't been to war yet. I'll put on a uniform and I'll go out there and kill the bad guys. And then you get out there and you're like, dude, I don't want to die.
Yeah.
And
Yeah.
yeah, so you gotta be careful. And I understand what you're saying, and I agree. You do all you can. I don't think I have any clients. You want to say, I don't think I have any clients that can't handle the heat, but you are going to have them. And they're just frankly not going to be as good as you. And that's bad traders and bad clients are about the same thing. You know, they don't care about discipline. They don't care about systems. They do care, but they can't stick with it. They don't really believe. There's very little difference between just kind of a bad trader and a bad client. But great traders are very systematic. You know, Salem, I thought, was one of the greatest traders ever because I would talk to him at the lowest points and there was nothing in his attitude, his eyes, nothing. He was as dedicated to doing the next trade as he was at all-time equity highs. And that's rare. And you need to get to that point to be super effective.
I agree, and it's yeah, you have to be a diehard. You have to be a radical. You have to do the work too and know what you're doing has some merit. And it's not just some blind faith thing, which I think a lot of investors or traders get into because they don't do their work enough. And then when they get punched in the face, they're like, "Oh, what do we do now? Is this shouldn't happen, right? This is losses. Wait, this seemed like too big, or I don't know. You think everything's good, and what about the Fed now?" And then it just starts spiraling out of control, and their thoughts and everything goes to shit. Then they start tearing it down, either
Yeah,
abandoning it
but
altogether,
yeah,
tinkering with
but
it. Yeah,
yeah, but once again, you're throwing in these qualifiers. I'm throwing them out. Like it doesn't matter if you have if you have a great system, you've done all the work you could possibly do, you still could reach these points. At any point in time, the greatest trader of all time, trading small, best system on the planet, following it 100%, you can go through these bad periods and you need to, I think, you know, AQR, it's almost a distant memory, but they went through all these bad periods. I think at one point their managed futures mutual fund was 5 billion. I think it's
yeah,
now like 1 billion, and um, they never blinked with growth. I know he's big into growth, his own version of trend, but you just gotta never never blink. The great thing about trend is you can always cut back and trade a little bit smaller and keep doing your systems. That's I think is another kind of superpower. If you get into a
sure.
situation where you underestimated the drawdown and the impact, trade smaller, and then but keep doing the system. The trade smaller rule is the greatest rule of all time because it facilitates the most important thing that a systematic trader can do, which is continue to follow the system.
Yes, by far number one. It's
Number one.
only it's only been reinforced in me since my first day when you read those things, you hear those things from older traders, guys who've been doing it a long time. Then you start to appreciate, like, oh, this is one of those moments where, yeah, I don't want to do it, but this is probably what they're talking about. This is probably when they themselves has made mistakes. And so, okay, I got to be cognizant of that and do the right thing. The right thing is just execute it just like you did yesterday and keep doing that, because without that, you have nothing. There is no foundation. It's just on your feelings and whims and
And the
everything
rules,
else. No
the
rules.
rules are one thing that I think a lot of people miss on the rules. I mean, I think there's nothing more important than having the best rules. Don't get me wrong. I'd never subscribe to this idea of it doesn't matter what your entry is, or it doesn't matter what your exit rule is. Just go with the trend or diversify. You can have random rules. Never, zero. You can never put too much emphasis on improving your trading rules. However, at the same time, the rules have a special function, which is they ensure that you handle each trade the same way each time for the rest of your life, you know, until you change the rules, I guess. Then from then on, starting now, I'm going to proceed as if I'm going to use these same rules because that's what the rules grab out of the data is the benefits of this habitual consistency, dogged consistency that's the way you pull money out of the markets is you handle the situations the same each time and the sample size of situations that these rules apply to is sufficiently large. Does that make sense?
Yes, it does. Um, it's just so many things. Just so many things to you hate the term, you hate the education, but it's not even just trying to make you smarter because you're so dumb, Mr. Client. It's people I think need to be reminded sometimes. Just these feelings come up, and they're just good entry points. Same with diet and fitness. Some days you just don't want to do it. Like you have to do it. You have to hit the gym again. Pass up on that little snack, that little cheat meal that you want, because you're just not going to progress. There's going to be no long-term progress at all. Um, it's so I don't know. I think things like that are important, at least for some of the newbie people into it, and uh, the traders as well as the investors. But uh, anyway, uh, so you had some thoughts on the title of the podcast. What's that all about?
Yes. So talking trends. Yeah, I think I've said this before. Maybe I'm just repeating myself, but hopefully we haven't said this too much on the podcast. But I think that I've tried to describe this idea that first and foremost, we need to look at trading and trading with systematic trading and trading with rules as a product of the back test. And we're dedicated to following these rules, um, but not so not so much trend following or trading trends or talking trends. We're talking more about a systematic approach, a back test that's been verified, some rules. And so when the first person did a back test, they may have had an idea of what would work, and or they may not have, and so it may have taken them a long time to come up with this idea that I think taking small losses and letting profits run is works. And so they put in rules and they understand, and the rules replicate and are a good way to describe the rules is trend following or letting profits run or taking small losses, longs and shorts, lots of diversification, whatever it is. But I think that so often but it's just the way words are used to describe, insufficiently describe a systematic approach that you one could say, I'm never going to describe it. I don't need to find these words. I'm not going to tell you what I do. And then, but someone could say, well, but it's all trend following.
Hmm.
But the trend following and the words that people use, following the trends, being in gear with the trend is up, the trend is down, the trend is ended. Everyone knows the trend is ended. How could you still be long because the trend is reversed? Blah, blah, blah. These are just very insufficient ways of, of talking about a systematic approach and trying to maybe help yourself understand what's really happening and certainly help clients understand. Like, tell me about this. You wouldn't want to say, well, here's the code, read the code. No, you would want to say, well, here's what it kind of does, etc. But you open yourself up to situations where the trend, in some people's mind, has reversed, but you're still short. Or the
Sure.
trend is up, but you're not long. And it plays with your mind. Like, there must be something wrong with me then. I thought I was a trend follower. And why didn't I switch around quicker? Or why did I get out so quick? Because a lot of people who are trend followers stayed long, and that was the better trade. Right now, that's better. And so I think it's just good to realize that all of the words that you overlay on top of your back-tested rules that are written in code are not the final say, because you will be long when it looks like the trend is down or over. And anything that you
Ah,
can imagine, you will have this, you can have this issue. Your clients and yourself can have this issue of, it doesn't look like you're really following the trend very well or at all, and I thought you were a trend follower. And so just to understand that really we don't want to talk trends because that's subjective. And
sure.
not only that, but I'll tell you what is objective, very objective. System one of mine is long a certain market, but system four is short. Yeah, at the same time. So where in the
Yes.
fuck is this trend? Right?
Yes.
And then you could say, you could make the excuse, well, system one looks at shorter term trends. System four looks at longer term trends. You know what? System one has a certain set of parameters in code. System four has a different set of parameters, maybe the same code or slightly different code. And that's what the computer has told you works. Anything you put on top of that as verbal or written description is going to be insufficient. Do not allow that to take precedent over the specific rules that your system has. Do you think, I'm sure you understand what I'm saying, but do you think
I
there's
know what you're
a
saying.
big, do you think there's a point there that's worth talking about?
You're a very picky man. Uh, that's very picky. But yes, no, I understand what you're saying because it's you know, we're not, at least in our trading, very wishy-washy people. We're not we're not looking at charts. We're not you know thinking about the macro landscape that like what the hell's that? All these different interacting elements that are influencing the market movements and all these things that it just you can't code it up. We need to know exact rules. So yes, but you know, coming up with a name for a show is hard. We could call it the Mike and Jerry Show. You know, we could. That's yes, that's us all the time.
Oh, no, no,
Um,
no. I'm just picking on the name. I think it's a fine name because,
yeah,
look, this is inside baseball to a large degree, very picky.
yeah.
I'm just saying that, I had people over the years. I mean, I had this one guy berate me one day. He was reviewing my trading and he pulls out a chart. And I remember it was a Swiss banker guy and he was probably not going to listen to this, but not a fun person to be around. And
Mhm.
but dude, if you listen to this, call me up and we can hash it out. And he pulls up a DAX chart and he shows me the DAX chart, and he says, you got out here, and which was, a material reversal. And he said, don't you think that everyone knew way before then that the trend had changed? And I'm like, oh, seemingly like a lot of things people say, you're like, damn, that makes a lot of sense. I mean, really, it makes a lot of sense. I'm a trend follower. Everyone knows. It looks like the trend has changed. To me, it looked like it changed as well. And yet, what's wrong with my system? And yet, it's not a question of has the trend changed. It's a question of I did the back test. I optimized the parameters. Hanging on to that trade longer makes more money. It's really not about has the trend changed subjectively to a person's eyeballs. Um, yeah, the eyeball test, the eye test. We hear that in college football a lot. It's the eye test. I know Texas is better than Washington. It's the eye test. And then you play the
Right.
game, and the eye test sometimes isn't that great. And I think the eye test is not what you want to do. How can you be a trend follower and still be long? And it's not about that. It's about the system. It's almost better if we didn't even know and we could follow it and feel less bad about it by staying in too long. But we stayed in these. I stayed in a lot of my short bond positions, U.S. bonds, and you know, nothing. When these trends change like that, there's no statistical evidence that it means too much. It means anything. Oh, now that they changed and your system is now long, now, no, not now, because I'll probably lose money. It's really depressing. Trend doesn't mean anything. It's the system.
No, the yeah, I think a lot of the technical guys. I saw a tweet from Mike Covell this morning. It was a meme, one of these pictures with four different cartoons and just almost like a Dilbert sort of look. And the first one is a guy sitting with his hands around his legs, and it says, "I don't know where the market's going." And his friend comes up and says, "Just draw more lines." And then
That's right.
he show he shows him drawing lines on a chart, and he says, "Oh, I know exactly where it's going now." Like, nah, that's not that's not trend following. That's just chart masturbation and making yourself feel good. Um, Very subjective. There's no way you can repeat that. And going back to Market Wizards when I first read it, I don't know, 2007, and a lot of the guys started out that way. And it was maybe a more I want to say primitive time, but definitely I think a lot less information readily available than there is today. That's for sure. But how one of the main undertones was they used to be more loosey goosey, looking at charts, things like that, and then determining where to buy and sell. And then they get more systematic over time because, that loosey goosey way tends to bite them in the ass at some point. And it's a lot of work, and you just don't really know what you're going to do each day. Like, we know where system one is. We know what system two says. We know what all the
Exactly.
systems say to do.
Yeah,
So
and you
I
brought
know
up a
exactly
really
what to do.
you brought up a really good point. I mean, this makes me think of some stuff I was reading yesterday. People are obsessed. There are people out there who are obsessed. They're mad and angry at trend following, the way the CTAs do it, the way that I do it, let's say. They're
Yeah.
really angry because they love trend following, or so they kind of say, they love it, they talk about it, it's wonderful, but they're very critical of the trend followers and want to get in my shit about it, not admitting the problems with it, and it's not that great. And they love Druckenmiller and Soros. And
Yeah.
so the quote I saw yesterday was, and I retweeted it, was something like, this guy had written about Soros, quoting Soros and Druckenmiller, saying like, take small losses, let profits run. And, and so you can listen to these guys and watch them. And You can say, oh, okay, yeah, it's letting profits run, take small losses, diversify long and short, currencies, commodities, stocks, bonds. Okay, it sounds like very trend following and systematic, but it's probably back in the day not systematic. I wouldn't think that Soros was very systematic. He probably did overtrade and discretionarily do things. He's the guy who did it, survived it, made a ton of money, overtraded, got lucky, risky, billionaire. Now, why can't you guys do that? Can't you admit that's better than hundreds of positions, really small bet size, and the sort of the way that you and I handle the trend following? And I'm
Yep.
like, maybe, but maybe he was one of those who got lucky. Where are the other people that did the same thing but happened to bet too big on the wrong trades? They did the small losses, they did the let profits run wonderfully, but they loaded up on something other than the pound when
Right.
Soros broke the Bank of England, and it didn't work out as well for them. And so this is lost. Hey, this is evidence that you can't diversify. You need to trade larger and be a pig
Yeah.
and not be so limited and hemmed in by these stupid rules. Just be philosophically a trend follower and a small loss taker and a letting profits run person. But these systems with these rules and all these markets, and it just sucks. It's not good. Be a swashbuckler like a wild
Nice.
person, you know.
Nice term.
Yeah,
Yeah.
yeah. Pull that out of my ass. Yeah,
Very nice.
and it's more like it's more subjective because this objectivity of systems and trend and letting profits run, no dynamic position sizing. Oh, I came up with a new term for DPS, dynamic position sizing. It's now
Okay.
called dynamic profit slashing.
That's good.
I posted that last night. I'm on my phone trying to find synonyms for reduction, reducing, or something. And Lisa came up with slashing. So I'm like, oh, that's
Oh,
good. That's
good.
good. Slashing those profits. Yeah, it's you can love trend, you can love trend following, and the tenets of trend following. But boy, loving and marrying a trend following approach for the rest of your life, like you would aspire to for your wife, no one loves that. I mean, very few people see the whole benefit of. I look at it as I'm home free on day one of trading, on day one of getting the systems from Rich or getting the systems out of the computer. I'm just like, it's over. Uh, the future has been written as long as I follow these rules and accept those drawdowns that the computer says, hey, if you really want to crush it, you got to be more accepting of these drawdowns on open trade profits. And I just see it as being so thankful, not as something that's going to cause me issues and cause me regret. My regrets in my trading life are 100% just not following the systems, even the systems that my initial systems, which were not as good as the ones I have now, not following them 100%.
Uh, can you recall back to when, like, an instance of that, and maybe why you didn't?
Well, initially, I've said before, initially the bottom line was, in 1984 was do the trades. So my first week of trading, I did like half the trades. And I was
Yeah.
thinking about why I did that. And I think it's this idea that taking a loss once you put the trade on, taking small losses is not, I don't think it was that hard for me or for most people. It starts before that. I don't want to take a loss, so I won't even do the trade.
Mm.
That's horrible, right? You can't do that. You miss the big trends. Feb heating oil 1984, the first big trend for the turtles, like 2 people did it. 2 out of 10 or 12. What's
Wow.
going on? You just left the class. It's January. And the bottom line was do all the trades. So that's where it started. And then I just remember not being able to wait for the trailing stop and trying to get out of profits too quickly. Yeah, the 2 cardinal sins. Don't do the trade and don't let the profit run. And all you're asking back in the day, of course, is follow the system. Oh, so you're saying if I follow the system, that's letting profits run. Yes. But nowadays, the fancy CTAs, they build in things into the system that take profits before the trailing stop would be hit. And they call it system trading. I'm following the system. So then I'm like, well, you got some shitty rules.
Yeah, I think mostly it's their attempt at handling the feelings that they have. They don't like to take loss. They don't like to give back. They don't like to have a stretch like a recent November, December, or short-term give back like that. They want to be. They don't mind making less, but they don't want to feel that real big reversal, which they declare as bad. That's not what good traders do. So.
Oh yeah, but my contention. Oh, I'm hearing myself in my headphones. Did I do something, or did you do something?
Let me see. Still here? Testing?
Test.
Hear yourself?
Yeah, I hear myself.
I'm not sure what happened here. I can't edit it. I can't remove background noise or cancellation right now. So
Yeah, it's a bunch of background noise.
all right.
Well, anyways, I'll just keep talking. I just wanted to make one final point. I forgot what it was. What were you just saying?
The proper, the new, more sophisticated, quote unquote.
Oh
traders.
yeah. See, I think at the root of all of the dynamic position sizing, not the root, but at the core of those new systems is the core system. So they are trading something that's core with reduced positions, increased positions based upon volatility, correlation, relative strength, whatever. But those add-ons cannot outperform the core system. We only trade the core system. They can't outperform us. But you say they must, or they wouldn't do it. And I'm like, yes, this is how they outperform us. They introduce Sharp.
Yeah. Take it away from profits and go to risk-adjusted profits. Go to ratios. Go to AUM.
Right.
Yeah,
so
you're
I
okay,
measure,
but we got 4 billion. You got 100 million.
my,
So what?
right, my risk-adjusted metric is I make my average win versus my average loss. So my win-loss ratio, or when I bet $1, I make 3 or 2, and they look at Sharp. And so if you can introduce an inaccurate measurement, you can convince yourself and your clients that all this nonsense actually does enhance the core system, but it doesn't. That's the whole problem.
Yeah, I like our way better, and I don't know. It just seems silly. Keeps seeming silly to say that profits are more important, especially for the end user. the investor, than Sharp is. Sharp benefits mostly us. It would benefit mostly a manager who can then use that to raise more assets. Doesn't mean more money for the end investor. It just means, maybe it's a smoother equity curve. But if the equity curve and the rate of return is lower, then who gives a fuck? That's my take.
Well, the problem with using Sharp or some of these other vol measures is they don't translate into risk of loss. It's not a correlation.
Right.
We have a superior method with that. Yeah, we've described it, which I think we probably shouldn't describe it. But there was this one other quote I posted from Meb, I think, and it was kind of pretty interesting. Let me see if I can find it.
Don't worry about. Oh, sorry.
Don't worry about people stealing your ideas. If your ideas are any good, you'll have to ram them down people's throats. So that's a good.
That's a good one.
Yeah, that's my experience as well.
Yeah.
Oh,
that's yeah. It's just a curve. It's unfortunate.
Yeah. All right, I'm out of work. I'm out of breath.
Okay, it's a good place to stop. We got some topics, ideas for next week too. So we'll leave it here. Thank you everyone for listening. We'll get back next week. Jerry, see ya.
All right, take care. Have a good weekend.
Bye. You too.
Bye.